Good afternoon for those of you to most of the country, and good morning to those of you on the West Coast. I show it to be about 11:02. So we're going to get today's very special program underway. First of all, thank you for attending this town hall special follow-up, if you will. For those of you who are not familiar, NAIFA's been conducting these town halls ever since our world got turned upside down some 60 some odd days ago. And we feel that we've been getting great response. One of the topics that received a lot of attention was obviously the Paycheck Protection Act that we're talking about. Paycheck Protection Program, excuse me. Last week we had two great guests on that I'm going to introduce in a minute. And the interest was so high that it was felt that this follow-up question and answer session would benefit most of you. So you've asked for it and we're going to deliver it. But before we do that, we'd like to get into a couple quick introductions. And first of all, I'd like to introduce the CEO of NAIFA, who is leading us through some calm and stormy waters. Without further ado, Kevin Mayu.
Hi, Tom. Hi, everybody. Thanks again for joining us for this special follow-up NAIFA Town Hall. It's great whenever you have more than 2,000 people attend a town hall. And there's so many questions there that you have to schedule a follow-up just to make sure you get to all those questions and provide the right information to our members. So again, I want to thank you guys for participating in these. Thank you for soaking the information that's presented in and then sharing it, of course, with your team and with your clients and others. It's real important. And that's just one thing that NAIFA is your professional association. In fact, as the professional association for the entire industry. It's what we do for you. We help keep you informed and educated. We help provide that sense of community. And 24/7, 365, whether there's a pandemic or not, NAIFA's always got your back with policymakers and everyone else to make sure you can do the best job possible to serve your clients and look after their financial best interests. So a couple of things. One, I did want to, again, flag to you the fact that we have started a disaster relief fund, which we're calling the NAIFA Family Response Fund. What we've done is we've reactivated the fund that we've used in the past when our members have been hurt by hurricanes or other natural disasters. We've reactivated it to be able to use by people that have had actual physical impacts, meaning health or, unfortunately, in a few cases, death related to COVID-19. We have a fund available. You see it right there on the screen. It's at the web address to give is cfacadiana.org/NAIFA. So you can read it better than I can. So if you're interested in applying, if you've been impacted like that, please do. If you're interested in donating, please feel free to donate. All that money will go to NAIFA members, your peers and colleagues that have been negatively impacted by COVID-19. A lot of stuff going on here in Capitol Hill, as you know. The Senate yesterday did pass kind of version 3.5 of the COVID-19 relief package, adding hundreds of billions of dollars to the various packages that are out there, the Paycheck Protection Program, to the EIDL loan program, et cetera. We expect the House to pass that today or tomorrow at the latest, but we're looking at today. And so we're looking for an update from our government relations team. A Gov update will be in your inbox tomorrow, and we'll bring you up to speed with, again, what's passed, what it means to you, et cetera. So you have the information on how it impacts your business, but also you can pass the information on to your clients so they know what the federal government's doing to provide relief during this pandemic. By the way, if you don't get things like the NAIFA Gov update and you'd like to get them, they're kind of reserved for members only. But you can send an email to info@naifa.org and we can make sure you're on that list. So if you're not getting, again, Gov updates, please let us know, because we do want to make sure that you get the information that you want to receive from us in a timely and relevant fashion. In addition, we've had more than 200 bills that have been sent out through the various states as they've also been addressing COVID-19. We have a bill tracker that's a real-time bill tracker available in our COVID-19 resource kit that's available online as well. So if you'd like to see if there's any legislation or anything else going through your state, you can do that again through our state bill tracker in our COVID-19 resource kit available on belong.naifa.org or financialsecurity.org. That information is available to you. And of course, if you're not doing that or you just don't have the time to check on those things, do know, of course, we have a monthly Gov Talk newsletter that summarizes all the activities that have gone on in the past month and presents it to you in a concise format. So you've got it that way. So all the things we're doing to try to keep you informed as to what's happening on the federal level, on the state level, and at that level in between, the interstate level, which is what goes on with these different associations of like insurance commissioners and others, other regulators that work and provide model guidance for all the different states. In addition to all the great stuff we do on our town halls, as a member of NAIFA, that we're part of a lot of different partnerships and coalitions. And so one of those is the Congressional Management Foundation, which is an organization that kind of acts as a liaison between members of Congress and constituents and tries to make sure that democracy works well by sharing information both ways. So the constituents are informed as to what's going on, and also the members of Congress are informed as to what their constituents are thinking. And the CMF is putting together a special webinar on town hall on the coronavirus outbreak, which we have all been invited to attend. And that is going to be on May 5th. And it's a great opportunity to engage. So as a NAIFA member, you have free access to that. So we'd encourage you to take advantage of it if you're interested. Again, May 5th, the CMF special webinar on the coronavirus outbreak. And then speaking of all the great stuff going on, of course, we've had to repurpose the week that we would normally use for our congressional conference. And we've repurposed it as NAIFA Nation Impact Week. And so that week, we're going to have 3 full days of great virtual programming, 3-hour sessions long each on Tuesday, Wednesday, and Thursday, May 19th, 20th, and 21st, that talks about, on the first day, diversity and our efforts to make sure that we're serving a diverse community, we're serving a diverse country, and that we can recruit more diverse folks to serve in the industry. That's taking place on that Tuesday, May 19th. On Wednesday, the 20th, is our Advocacy and Action Day, where you're going to hear from our stellar government relations professionals and contractors and folks that work on our team to help advance your message on Capitol Hill, and also talk to you about how you can be involved. And that's going to take place again on May 20th. And I think a few members of Congress will be joining us for that too. So be on the lookout for that. And then on Thursday, May 21st, we've got a Leadership and Action Day, where we're going to be sharing ways you can do business again in this environment, how you can grow as a leader, how you can provide leadership for your team, and be a leader in your community. And we're also expected to announce real soon a guest speaker or two that's going to join us for that. And I think when you find out about that, you'll be really impressed. So stay tuned to find out news about what we're going to be doing on all of NAIFA Nation Impact Week, but particularly for that leadership session on Thursday, May 21st. So a lot of great stuff going on. Registration is free for all the activities during May 19th through 21st. And of course, all these town halls are free. So if you are a NAIFA member and you've got non-NAIFA members that you think would like to attend these, particularly producers in your office or other folks you know in your community, invite them to join us. We like to really show them what NAIFA is all about. And we like to give them an opportunity to leverage the resources we have. And hopefully then they'll understand, again, the value of membership, and hopefully we can welcome them into our fold at some point in the future. So again, thanks for all you do. Thanks for joining us, and back to you, Mr. President-elect.
Thank you, Kevin. I appreciate it. And again, on behalf of all the NAIFA membership and everybody that's in our industry, we thank you for your leadership in these uncharted waters, as they say. I mean, if someone had told me 90 days ago that I'm going to be hosting a webinar on the Paycheck Protection Program, I think they might have had me committed, as I said last week. But it is what it is, and we're here. And I think there's the old adage that said, life isn't about waiting for the storm to pass. It's learning how to dance in the rain. And I think we're learning how to dance in the rain, and we want to help all of you dance in the rain as well. And that's why we've put together this follow-up program. There was a question that came up: is this the same webinar as last week? And for those of you that were on it, no, this is different. This is a follow-up question and answer period because the time was just so short with so much material to cover that we thought this would be a great follow-up. And our two speakers today have offered to come back, and we thank them. And with that, let me introduce the panel today, if you will. First of all, we'll have Diane Boyle, who heads up our government relations team. She'll be assisting us. But then, as many of you may not know, the NAIFA advocacy team is an inside and outside, if you will. Diane heads up the inside, and we're lucky to have just some phenomenal, if not the best, outside counsel on Capitol Hill with Steptoe and Jensen. And we have two of their finest today with us, Mr. Scott Sinder and Ms. Kate Jensen. I'd like to read you both of their bios, but we might be here till tomorrow, so we're not going to do that. But let me just first say, Scott's been working with NAIFA for over 20 years. He's been through some pretty challenging times, including this one. He's been practicing law for over 30 years after receiving his JD from the University of Michigan School of Law, where he also did his undergraduate work. He's joined today by none other than Kate Jensen, who's a member of the Government Affairs and Public Policy practice at Steptoe. She's been practicing law since she received her JD from University of Georgia Law School, magna cum laude, I might add. And she's been a major advocate for us during the DOL, and now also helping us immensely on these two. So without further ado, I'm going to give the floor over to Scott, Kate, and Diane. And thank you. May I first say thank you to all of you for all you're doing for us and advocating for us in these difficult times. We really, really appreciate it. The floor is yours.
Great, thank you, Tom. I'll kick off. It's difficult to believe that the CARES Act, which actually created sort of the PPP program for us, isn't even a month old yet. And we've already exhausted funds for the first round. The Senate last night approved funding to get this program started again, and we expect the House will take it up either later tonight, probably tomorrow morning, and we'll get a gov update out to you, as Kevin had mentioned earlier. Anyway, this is a follow-up call to the one that we had outlining the program. We had so many questions that we wanted to make sure we brought Scott and Kate back to address them. So I'm going to start with sort of an easy one. We'll start with general process definitions. And the first question that we had was regarding affiliation rules. And what are they, and why are they asking this question of us?
So affiliation rules, let me start at the end and work back to the beginning. They're asking so they can determine whether or not your business is eligible for the program, because the intent is to limit it to truly small, truly small businesses. And you know, you've been reading press reports about some larger businesses have been successful in receiving loans where maybe they should not have. I believe that there will be a price to pay for that on the back end. We don't want to be them. But you're affiliated with another entity if you're owned or controlled by a common set of owners or a board. And the ownership test is 50% or more. So if you have entity A and entity B, and they have over 50% ownership in common, then they are affiliated. If one controls the other through board operation or otherwise, there would be the affiliation. If you're affiliated, then you count the employees of both affiliated entities to determine if either is eligible for a loan under the program.
Great, thanks. The follow-up to that is, if there's an owner of a business who receives a W-2 salary, are they considered a full-time employee?
They are, but even if the owner, which means that their salary can be included in the calculation of the loan for which you're eligible, and you can pay that owner the salary as part of the permissible uses of the loan. But they clarified a rule that's a little different than the normal tax rules. And even if the owner does not receive a formal salary, let's say they're a K-1 recipient because it's an LLC or a partnership, they are allowed to receive up to $100,000 on an annualized basis through that payroll allocation to them. And that money can also be used in calculating the overall amount of the loan for which that entity is eligible. So that's a simplifying and good rule at some level.
Okay, and so when we refer to compensation, are we talking about gross or adjusted gross income?
We're talking about gross. So it's basically all the cash compensation you receive or things you receive in lieu of cash, like education dollars, for example, that all would be reported on the W-2 as taxable income. So it's the top line income that's received by that individual. That's what you can count. In addition, you can count other expenses paid on behalf of that employee by the employer. So the two best examples are group health benefits, only the employer side, because it's already included in that gross income on the employee side, and the same with employer retirement contributions. Both of those can be included in the payroll calculation for any individual employee.
Okay, and that sort of brings us down to independent contractor status and 1099 employees. We had a number of questions there. The first one is, I'm an independent insurance agent that gets paid directly by the carriers I represent as a 1099. I do have business, but it's really just me. Do I qualify for the Paycheck Protection Program? And do I count myself as an employee when I complete the application?
You do count for the program. So this is a change that they made during the course of issuing their various rounds of guidance. If you were working for a smaller entity, let's say they had less than 500 employees, they would not be able to include you in their calculation. They want you to apply directly. I believe it's interesting, Kate. In terms of saying one employee, I guess you would say one employee. We expected them to have a different form for 1099 individuals, but they don't. They never issued a separate form, use the same one. And I think you could just say one and note that it's yourself.
I think
And
that's
sort of-
right.
I'm sorry, Kate, did you have more than that? That's right, because we want to stroke Scott. So if you want to say that again loudly, that's probably okay.
So yes, that's right. So you can apply as a business of one, but you also may apply for yourself and for any other employees you might have. So I think there were some questions about, do I have to have other employees to apply? No, you can just apply based on your own owner compensation. But they have given you some latitude if you do have other employees to also account for the wages and tips that you pay them.
Great. So that answers actually a few of our questions. So let's jump down a little bit. So how does an independent contractor show proof of using funds for payroll? Does it matter if the independent contractor still has partial income?
They're required to submit their Schedule C, where they would list that income and the expenses that they allocate to that. So, your investment income would not count, because on Schedule C, you're just listing your business-oriented income that you're receiving as a non-employee of other entities.
Great. I think this is similar, but a little different. Maybe you can give an example. So it says, please give an example of a single independent contractor that does not have a corporation, earns income from life insurance, annuities, and mutual fund commissions. What documents would be needed to prove income?
Well, they're relying on your Schedule C, and if you
Right.
receive a 1099, you'd list your income on the Schedule C. I think that technically that's all that's required to verify your income, but I suppose you can submit the 1099 forms as well. And again, they have some slightly different rules. You qualify for a little bit less money unless you have expense offsets. Because of the need to use all the money for payroll expenses, which is just going to be payments for yourself. But that's more on the calculation side than whether or not you're eligible and what you submit to demonstrate eligibility.
Thank you. So this is an interesting one. So are you able to apply for both the Paycheck Protection Program and unemployment as a 1099?
So I think that that's more of an unemployment question than an SBA question. Our son is both a 1099 recipient, and he also gets W-2 income from a realtor. So both of those avenues are shut down. That's a state law question in Virginia. They're going to look at all sources of revenue. They will look at the SBA. I believe they will look at the loan proceeds as a source of revenue, but they may not. But that's strictly a state law question. So I'm not really well positioned to answer it. I think in Virginia, we concluded that they would deduct from the unemployment payments anything he received under the PPP.
Great. So for self-employed, no out-of-pocket rent or utilities. Can you speak to the best way to put ourselves on payroll since our incomes fluctuate month to month? Do you use the average over last year in the same period? In other words, how can you justify loan forgiveness in a manner with no payroll? If I made more in 2019 versus 2020 over the first quarter, I would assume not forgiven.
So this is, Yeah, go ahead, Kate. Yep.
So the forgiveness piece for the individuals receiving self-employment income is a little bit different. So what they've done there is for your self-employment income, your forgivable amount for your payroll, you self-employed individual, is equal to 8 weeks worth of your net profit from 2019. So that's going to be reflected on your 2019 Form 1040 Schedule C. And what they're going to do is they're going to take your overall net profits from 2019, divide it by 52, multiply it by 8, and that's going to cap the owner, they're calling it owner compensation replacement amount that you're going to be eligible for forgiveness purposes. So it's interesting, but that also is going to be a look back analysis based on what you made in 2019.
Great. I'm going to pull one actually from, I was trying to check the current Q&A going too, in addition to those that had submitted from the last one. This one's a little bit different, so I thought I'd pull this one. What are the implications of putting in the same PPP application with multiple banks? Sorry, that's sort of a trick question for you.
So Kate, does the application say you haven't applied for another loan or you haven't received another loan?
So the application talks in terms of receipt of another loan, but the FAQ guidance that SBA put out speaks in terms of both. The question is formed as, can you apply for and receive another loan? And it says no. So I would be inclined to maybe be on the conservative side there and refrain from submitting multiple applications, particularly because if you were to end up in a situation where your loan was approved separately by 2 banks on the same day and they both get registered with the SBA, you might end up in some trouble there.
Great. I'm trying to scroll through. We had some similar questions. Okay, what about statutory employee eligibility? Kind of, you touched on that a little bit, but.
So, yeah. So I think that to the extent you have Schedule C income, you'll be able to apply for the Paycheck Protection Act loans. We had asked for specific guidance on statutory employees. After Diane, you had raised this issue with us, we have not received it. But I think that sort of kind of puzzling together the other pieces, I think that to the extent you're reporting income on just the main 1040, you would not be eligible, but to the extent you have Schedule C reportable income, then that income would be eligible for the program.
Yeah, I'll just add to that, Diane, that the way, and to Scott's point, this is a little bit of a gray area, right? Because you get a W-2, but you're really an independent contractor. So which bucket are you under for purposes of this program? And the way I've started thinking about it is almost by process of elimination. So in order to apply as an individual with self-employment income, you have to satisfy 4 basic criteria. You have to have been in operation February 15th, 2020. You have to earn some self-employment income. You have to have a principal place of residence in the United States. And you have to file a Form 1040 Schedule C. So if you satisfy those 4 criteria, as I read the regulations as they stand today, and we all know they can change any 5 minutes, then you are eligible to apply on your own behalf. If you don't satisfy those 4 criteria, then the only other option is to apply as under a regular business application with W-2 salaries.
Great. So one more on sort of the eligibility and scheduling. And now I've lost where. Okay, so I have a leased employee exclusively to my business who I pay through my carrier. It's an insurance carrier, and I pay them hourly. She does not receive a 1099 or a W-2. the deductions are removed from the agent's compensation, would they be eligible?
So if they are, so they wrote an FAQ for professional employment organizations, which are employee leasing organizations. And they said that the business that actually employs them, even though they pay the PEO, they can claim them as an employee and count their payroll load. The way you demonstrate that is you get the form, and I'm not an expert in this space, but there's something called a Form 941, which is an IRS filing, where the PEO is informing the IRS essentially that these are leased employees and that this is the arrangement. So if you can document the leasing arrangement that way, you're cleanly within the FAQ and you could include that person. I think that for organizations like this, where you're not really a PEO, you're not really leasing the employee from the PEO, you're probably going to need to talk to the entity, in this case, the insurance carrier from which you're leasing the employee, to see if they file that form, if they could, because that's the documentation that's required to show that they're classifiable as your payroll.
So if a 2019 Schedule C was not yet filed, can a 2018 Schedule C or 2019 1099 be used to determine the amount and eligibility for the loan?
No.
They have to file the, go ahead, Kate.
It doesn't have to actually be filed with the IRS. The language in the rules is have filed or will file a 2019 Form 1040 Schedule C. So if you haven't yet filed for 2019 with the IRS, that's not a problem, but you need to base your numbers off of what you would file in that form. So my read is that 2018 is not acceptable. Everything's based on 2019, unless I saw one question pop up in the chat box here for a new business, somebody who just started January 1st of 2020. Again, one of the threshold requirements is that you were in existence, operating, earning income, February 15th, 2020. For new businesses, you have a different look back period for calculating your loan amount, and that is between January 1 and February 29th of this year. So you should communicate with your bank at this point about what type of documentation they're going to require for new independent contractors. That's something that hasn't been specifically addressed, but it is contemplated that you could have an alternate look back measurement period.
Yeah, and I want to sort of emphasize one aspect of what Kate just said, and that is that you have the rules and then you have how the banks are interpreting and applying the rules, and there's not always a connection between the two. And so the more vanilla you can be so that you don't raise questions, the better off you are, which is why I emphasize the prior availability, for example, that 941 form for the PEOs. And there's going to be another, we had the bill pass yesterday. We should have started with this. It passed the Senate. The House is expected to pass it, I think somebody said tonight or tomorrow. Then the money will be released. The SBA will reopen the floodgates. And some banks are predicting that the money will be fully subscribed within 2 days. And so it really behooves you to be as vanilla as possible so that you don't get kicked out.
Great point. Let's move a little bit now from more of the application to sort of permissible uses. So we had a attendee from the last call that said he was told we could not include rent or utility by the banker. Is that true?
You can't, I'm sorry, can you start at the beginning of the question?
Yeah, and I'll tip you off. The answer is the bank's wrong. I was told we could not include rents or utilities by my banker. Is that true?
Well, so what I was going to say is it depends, include on what. So you don't include it on the payroll calculation for determining loan amount, right?
Right.
You do include it is a permissible use of the money. It's permissible to use it for rent and utilities, and it's also part of the forgiveness formula. On the forgiveness side, you can't allocate more than 25% of the forgiveness amount to non-payroll expenses, but both utilities and rents are permissible. And we have concluded, by the way, that rent is a little broadly interpreted. So it covers not just rent of a physical location, but if you are leasing equipment, that would also count as permissible use of money.
Great. And in the definition, so if we're talking about insurance premiums being allowed as well, any insurance premium, meaning workers' comp, E&O, building liability?
So there's a disconnect here between what you can use the money for and what you can get forgiveness for. So forgiveness is less forgiving, if you will, on insurance, and you only are allowed to use it you only get forgiveness for healthcare related, group health related expenditures made by the employer. So it would not count, again, the employee's premium share. But other insurance premiums, the money can be used for them. So you can pay any insurance premium for the money, but that will then be excluded from the forgiveness amount. We're, by the way, working to try to fix that very diligently, but we have not succeeded yet.
Well, and this might be a tricky sort of follow-up to that. So if your life insurance premiums, and go back to some of the scenarios that people were playing out earlier when asking that they were, agents that had people working for them that were paid through different venues, right? They're not necessarily 1099. If they're paid through these employees or these workers, especially if you get into a husband-wife scenario. Wife's an agent, husband works for him, but husband is paid through overall profits to that agent. If there's a life insurance policy that's paid and it's on both of them, can that amount be included, or do you have to separate that out for one individual versus the couple?
So this is the use versus forgiveness piece a little bit. If it's the business that's paying the insurance premium, it doesn't matter who you associate it with, but you won't get forgiveness on the payment of that premium.
Great. Okay, and let's see. Will a shareholder distribution count for the owner within payroll costs?
I think you still have to be a working owner. And if you're a working owner, then you're allowed to treat up to $100,000 on an annualized basis as income that you could include in payroll costs on both ends.
So we're talking about expenses. What about the expense related to, cell phones or cell phone service?
Account.
So go ahead, Kate.
Yeah, no, that so generally speaking, utilities are a permitted use category for your loan dollars. Under the forgiveness provisions, they've narrowed that category a little bit to some of the main utilities that folks pay, but telephone is one of them. So you may pay your cell phone expenses, and that is a forgivable amount.
Right. As sort of a follow-up, I think it's going to fall into that same category, but software support costs, are they considered eligible? Agency management monthly support, is that included?
They are not. But we have a inquiry into the SBA on that to actually treat it as rent. We think that the utilities is very specified in the statute and doesn't allow inclusion of software, but rents may. And we've also got a proposal that we've submitted on behalf of a client to try to get that specified in the statute, both for payroll related software, which then be part of payroll, as well as for rents, to define it broadly to include those sorts of services. But right now there's nothing that would appear to allow them to be the money to be used to spend on that, or it would definitely not be included in the forgiveness formula.
Okay, one here. How does the program view earned income during this time? Are you able to apply for the program for payroll relief while still having residual income, if it's just less than before?
Yeah, you are, because the calculation is based on the last 12 months or 2019. And I think most of the banks are really requiring 2019 data. So they look at 2019 at your average monthly payroll, slightly tweaked if you're a 1099 person, and you're allowed 2.5 times that amount as your payment, as your loan, and the residual income doesn't come into effect. So as long as you then use the money on the permissible uses and spend at least 75% on payroll going forward, you'll satisfy the requirements of the program.
And Diane, can I just add one more point on top of what Scott just said, just to clarify for everybody on the call what we're talking about when we say for individuals with self-employment income. So we're going to call you individual borrowers just for short. The number that they are looking at there to establish your quote unquote income that's eligible for the program is very specific. So they are going to look at your 2019 Form 1040 Schedule C, line 31. They are that specific. And they're going to cap that amount at $100,000 annualized, as Scott said. So everything is going to tie back to whatever shows up on that Schedule C. And of course, if you had no net profits or you had negative profits in 2019 on that form, then there's nothing on which to calculate your loan amount. So you will not be eligible for the loan. So I just want to make sure everybody knows when we're talking about what they're using as that measurement for your income as a self-employed individual, that's specifically what they're going to be looking at.
Thanks. Let's shift gears a little bit and talk about forgiveness now. We touched on it a little bit as we were going through some of the other questions, but one comes in and we have for the forgiveness purposes, does the payroll calculation have to be actually paid out during the time period or just incurred during the time period?
So I want to preface any discussion of forgiveness with this statement. We don't yet have final rules. Under the statute, the SBA has until April 26th, which interestingly is a Sunday, but what are Sundays anymore, to issue final guidance on forgiveness. And so anything we talk about on forgiveness is a little bit of a prediction based on what we know, but the SBA and the Department or the Treasury Department have not been shy about changing some of the rules underneath our feet. So on whether you have to spend the money or if it's just incurred expense, the statute says it covers incurred expenses that are made and incurred. Incurred and made, I think is the language. We don't know if you can get credit both if it was incurred and if it was made, or if it has to be both incurred and made during the 8-week period. So until we get that guidance, I can't tell you for sure. My instinct is to say that I would actually I would do a special paycheck at the end of the 8 weeks if we don't get better guidance, so that I could argue that I maximized what was actually both incurred and made during the 8-week period.
Thanks. Is only the principal balance forgivable or is interest as well?
It's all forgivable.
Great. If I already received money and signed a loan contract with the bank and SBA changes the forgiveness rules, will my contract be amended?
Well, I don't know what your contract says, and my guess is that, what's in the contract won't necessarily be at odds with the guidance, but you're going to be, one way or the other, you're going to be bound by that guidance that they issue.
And also, well, we should add here that the forgiveness piece is going to involve a separate application process. So what you're going through right now is fine for your loan. You will do a completely separate application to the bank that is servicing your loan at the end of your forgiveness period. So that's going to be anytime after the 8 weeks after you get your loan dollars. So a lot of this guidance that we're expecting will likely address what's going to happen at that application point. But I think, like Scott said, we've seen some curveballs in the guidance and the rules that have been issued to date. So the best I think we can counsel folks who already have loans, so they're already, the clock is ticking on their forgiveness period, is to be as sort of prudent as possible in these next 8 weeks during your 8-week forgiveness period. So I would say, yes, spend the money, actually make the payments in those 8 weeks, because that is the language of the statute, and put the vast majority of it toward your payroll costs, because that 75% threshold is definitely in place. So I think it is a little bit a disadvantage for people who got their loans early, because we don't have clear rules of the road yet. So you kind of have to do your best to stay within sort of the big boundary markers that have been laid down so far.
Great. Is there an issue if an employee voluntarily terminates?
Yeah, no, but, and this is something else we've asked for some leeway on. With this rule that you have to send 75% of the money on, there's really two rules you're looking at. One is, are your FTs at the end of the period back up to where you were pre-crisis, essentially? And the other is, have you spent 75% of the loan proceeds on payroll? So if somebody leaves, you're not relieved of either of those two burdens, but you don't have to be paying the same people. And so the theory is you can hire somebody new if somebody terminates for whatever reason. There are some really good reasons people are terminating. So for example, my neighbor's a doctor. He runs a business, a medical practice, and he's had people who have taken leaves of absence to help in New York as good Samaritans. And so he has this issue too. We've asked for kind of a good faith efforts exception to the hardened clad rule, particularly on headcount. You do have until the end of June to revive your headcount, but we're very sensitive to the problem. And right now, as the rules are written, there's not any latitude.
Great. The clarification here too. So on the application, it asks for average monthly payroll and then multiply by 2.5. Do you use your full Schedule C or do you cap it at the 100,000?
Cap it.
You're capped.
Right, so just put the capped amount.
Yeah.
Okay, let's shift a little bit off of forgiveness. I think we've gotten into that. Talk a little bit about spending loan proceeds and the timing. We touched on that a little bit, but we have two questions. I'm gonna go ahead and impose those to you. Does the loan origination date mean the date that the loan proceeds were received or from the date of the application?
Date proceeds are received.
Yeah. Okay. I'm interested in how the income over. What's that?
I like the really simple one. Sorry, go ahead. I'm sorry.
Yeah. And I'm good. You give me a simple answer, I'm moving on. Interested in how the income over the next 8 weeks works when the income is not a straight line, but a series of ups and downs.
You have the obligation to use 75% of the loan proceeds in the next 8 weeks, and you have an obligation to not cut anybody who makes less than 100. It's interesting. I've used to say who made less than $100,000 kind of before, but it's who made anybody who made more than $100,000 in any income period last year is exempt from the ability to cut them more than 25%. So if you had somebody who made, 50 grand, but they got a $10,000 bonus in December, that means they made over 100 grand for the pay period in December. So they're exempt from the cut rule. That may change when we see the final forgiveness guidance, but anybody who's under that, who didn't make more than $100,000 on an annualized basis in any pay period last year, you can't cut more than 25%. And so you'd have to sort of look at that as you may have to adjust some of your pay practices to make sure that you don't exceed that threshold, or else you'd get less in forgiveness if you do.
Now we have a couple of questions regarding folks that have multiple businesses. What can a husband and wife that own 50% each of several businesses apply for? We get K-1s in Form C-1040s, what can we apply for?
So each business is separately evaluated. You would list on the form that they're affiliated with one another. The only real impact of affiliation, there may be two here, but the primary impact is when you look at the affiliates, you look at the total number of employees across all the affiliates to determine eligibility of any one affiliate. So let's say they're all 10-person businesses. You have 5 of them. You have 50 total people across the 5 businesses. You wouldn't tick any of the affiliation prohibitions because of that. So you're fine. Each business applies for its own loan. The place you may get into some interesting issues, and I'm going to have a recommendation on this, is that no individual can receive more than $100,000 in compensation on an annualized basis through the program. I don't think that the rules necessarily speak directly to this yet, but if I were you, I would either allocate the compensation so that I don't exceed $100,000 on for either the husband or wife, total across the businesses, or I would just claim it as on one if overall you do exceed that amount. I don't think the rules speak to that yet, but they're going to catch up to that, and you don't want to be drawing more than $100,000 in payroll type income through the program across the businesses.
Okay, we have a slew of treatment of S corps, but I think we've covered that. You're looking at the Schedule C. Let's go on. So some lender issues and other topics. Might it make sense not to bother with the loan and just apply for unemployment? There's a good other issue.
It's math. We went through exactly that exercise with our son. But it's just doing the math. You know, I don't even know if unemployment benefits are taxable. That's the one, big advantage of the PPL program is not only is the loan forgiven if you do it correctly, but that's not taxable income, so it's excluded from your tax base. But I think it's going to be math at the end.
Okay. Actually, I have another one I'm going to pull off. Our commission-only producers are paid on 1099 and are not listed on our 941s, and they don't get W-2s, but their pay goes through our payroll. We issue 1099s through payroll, and we include it in our calculations, correct?
No. Anybody that you pay on a 1099 is excluded from your payroll costs. You count the 1099 individual to determine whether or not you're less than 500 people and you're eligible for a loan. But in terms of how much you can get and what you can use the loan proceeds on, 1099 employees don't count on either side of that. So they're excluded, the theory being that they can apply now directly for their own loan.
Right. So who sets the interest rates on the loan and the forgiveness, the government or the bank?
The United States of America has set the interest rate at 1%.
Very good. All right. Is the IRS check being sent? Well, this doesn't have to do with the program, but for the $1,200 per individual, the $2,400 for married filing jointly, they were asking if that was taxable. And the answer, I don't know whether you guys are prepared for that one or not, but there is not, the taxes are not on the stimulus money, is my understanding. Is that?
That's my understanding as well, that that's non-taxable income.
Okay. We sort of addressed this, should have been able to use 2018 1099s, and we've clarified that no, you still need to do the calculations for 2019, even if you haven't filed them, so that you're using 2019 data, correct?
Correct. And not only that, the banks are requiring your submission of the Schedule C to document your loan application.
Okay. This is an odd one. When I applied for the loan, the application asked, what is my cost of goods? I didn't know how to answer, so I left it blank because we don't buy goods. Maybe I should have put it under my expenses.
I think
Yeah,
this is
so
a different
go
loan
ahead, Kate.
program. Yeah, this question actually does not appear on the Paycheck Protection Loan application. So somebody may have maybe applied for a disaster loan. I'm less familiar with that application, honestly, but I think that's a completely different program.
The other thing is that they may have applied for the emergency loan. Some banks are also adding their own requirements that are based on their standard loan applications, which aren't required under the program, but they can do whatever they want. And so it may be coming from there too, but none of that matters for the PPP loan program.
Right. Yeah. And this goes back to a question that we got asked earlier in the hour. If your bank told you utilities and rent don't count, that may have been because you were trying to include those numbers in your application. And again, remember that the only number they care about for determining your loan amount is your payroll costs. So it's a little bit of a strange setup because you can use the money for a bunch of non-payroll stuff, but the actual loan is based only on payroll. So you know that it is odd, but it is also true.
Okay, speaking of odd, this one is a good question too, because I think we have a number of people there. So how are the banks going to respond to the applicants that submitted an application earlier and were advised that there were no funds remaining? Do they need to start the application process over again, or are they already in sort of the queue to be considered once funding is approved?
That's really a bank specific question. I know a lot of banks said to people, we're holding your application and we're going to submit it. So that is really a bank specific question. It's not driven by the program.
Okay. I have a simple retirement for my employees. Can I include the IRA match and the payroll for the forgiveness of the loan?
Yes.
Yes.
All right, we're going to do a couple of quick ones because we're running out of time. Is the spouse of the owner who is on payroll considered an employee or an owner?
I don't know that it makes any difference. Because now the way that they've constructed the ownership, say if she's working, so they're not allowing you to get passive income counted toward the program, but if she's working or he's working, the spouse is working, then you can count up to $100,000 of income on an annualized basis toward that, toward your loan amounts.
Okay. And on the forgiveness piece, when it comes to employee headcount, if you had 2 employees resign at the beginning of March, do you need to replace both by June 30th?
Yes.
All right, let me see if I can find one good one before we go. What about forgiveness premiums on employer-provided group benefits for long-term care, DI, vision, dental?
Only group medical counts. We think vision and dental counts as long as it's offered in conjunction with a standard medical plan. But the economic benefits, disability, long-term care, they do not appear to count.
Okay. All right, I think I'm watching time. And I think a number of the questions that I'm seeing are sort of repeats without getting into specific ones. We'll go through the list of questions that came in. Well, how about one quick one before we go? Can I give an employee bonus to an employee making $34,000 a year? I want to bonus 4,800.
Sure, why not?
Yeah, I think
Yeah.
so. I'm getting a lot of questions about this because, you know, the funny thing about this is you have to put everybody back on payroll. That doesn't mean that they actually have to be working or providing services to your business. But some employees are willing to work. They want to work, and so folks want to reward those people who actually are providing services. And we see nothing in the rules that would prohibit that. You just have to make sure that by doing that, if you're shifting payroll dollars around, that again, what Scott covered before, nobody in the process who makes under $100,000 a year suffers more than a 25% wage reduction. So you could, in theory, reduce the wages for some to increase wages for others. You have a little bit of play there, but you got to keep a careful eye on that 25% wage cut.
Perfect. Well, thank you both so much for your time. I think we've gotten through the majority of the questions that came in. There may be some in the question box. We'll go back and look at those. Those are really hard to navigate live. That's why we scheduled this follow-up Q&A so that we could address the questions that were asked on the previous presentation. We'll get back to you as soon as we have the program reauthorized. One of the questions did come through asking about 501c6s and whether they would be included when the funding comes in. And there haven't been changes to the program to include 501c6s. We're still working on that issue. Scott, I think you mentioned there was one change to the program that came through.
Yeah, the only substantive change they made is they specifically allow agricultural entities, and this is not an area of expertise for me, but to participate in the loan program. And for whatever reason, I think they were barred before, but I don't know the details beyond that.
Yeah, and that's not our question. That was be tapping so you could show your great expansive knowledge on this program. Actually, that was the only change that was made. Everything else for the purposes of NAFA members and your clients are essentially the same program that was in effect before. It's simply reauthorizing the funding to allow the banks to start issuing those loans. Mr. Michael, I'm turning it back over to you. Or actually, I said that I'd address this. One of the things before we go, the IRS is actually hosting a webinar tomorrow. We have the link will be provided in the Zoom chat box if it hasn't already been provided, and it may be of interest to you. It's supposed to be for Main Street businesses and workers. So not only did we think it would be of interest to our NAFA members, but certainly for your clients, you may want to tap them as well. And we can ask some of the IRS officials to follow up on some of our questions and answers here. So now I turn it back over to Mr. Michael for closing remarks.
Thank you, Mrs. Boyle and Scott and Kate. Let me just give you a round of applause. I'm sure that's circulating throughout the country. We just really appreciate all the information. I have to be honest, I received 2 texts during the call that said, the information I received today paid for my NAFA dues this year and for many years to come. That's the value of a NAFA membership, so thank you. Real quickly, I know a lot of you got to get going. These webinars are taking a lot of time, but tomorrow on our town hall, we have Wade Pfau, professor of retirement income at the American College, a noted author, and he's recently come out with an article in regards to how the 4% distribution rule might be a little bit in danger due to the market fluctuation. So I think everyone could benefit from that. Next week, we have Joe Jordan on Monday, author of Living a Life of Significance, who's a great speaker. And I don't think there's any of you who've ever heard Joe. Always come out feeling a lot better about what we do for a living. And we also have Scotty Brennan on Thursday. Scotty's a past MDRT president, winner of the 2016 John Newton Russell Award winner, the highest industry award there is. And so you can see the we got David McKnight in May. So we're very excited about the programs that are coming up. And last but not least, for those that have already occurred, you can go to belongtonafa.org/town halls, and you can get all the town halls that we've done, including Tom Hegna, and also the PowerPoint that Scott did last week in regards to this. So there's a lot of information there for you. We want to thank you for all your support, and I wish you a great week. Be safe, and I think it's a Wednesday, but whatever it may be, have a great day.